Hello friends, welcome to Exambi. This is lecture 10 for our financial awareness series of LIC AAO 2019, and we've already discussed most of our insurance topics as well as some of the other financial topics in our previous 9 lectures, as well as we have discussed Union Budget 2019, which is very important, and 1 or 2 questions are expected to come from budget also. So please do watch those videos. In this video, let's start with qualitative tools of monetary policy. In the previous video, we have already discussed all the quantitative tools, and quantitative tools of monetary policy is a very important topic, and one question is expected out of quantitative tools. Now qualitative tools, so these are 5 most important qualitative tools. Okay, so you just look for these bold margin requirements. What are margin requirements? Let's understand with an example. Suppose you want to take a loan for a vehicle. Okay, suppose you want to buy a car and want to take a loan, and bank says that it can only give 60% of the loan. So 40% of the amount of vehicle you have to put from your pocket. Okay, so you must have 40% of the loan amount. Suppose a car worth 5 lakh rupees, so 2 lakh rupees you should be having with yourself. Okay, so get an advance payment of 2 lakh rupees, and 3 lakh rupees bank will provide you. So bank will provide you only 60% of the loan, right? Then we have consumer credit requirements, issuing rules regarding down payments and EMIs for the purchase of goods on credit. So RBI time to time, in a regular manner, it publishes guidelines in the newspapers, on its website also, rules and regulations regarding the down payments and EMIs. Okay, so as to control the credit requirements. Then moral persuasion, informal means of selective credit control. Okay, so if RBI wants to control the monetary supply in the market, or it wants to decrease the monetary supply in the market, so it will try to morally persuade, like advertisements in newspapers, advertisement on various websites, on its own website, through TV advertisements. Okay, so it will try to persuade the customers. Okay, then rationing of credit to bank. Under this method, this is the maximum limit. There is a maximum limit to loans and advances that can be made by commercial bank to some sectors. Why this is done? In order to motivate banks, or in order to persuade banks to lend to some priority sectors like agriculture sector, etc. Then publicity in media by RBI about its views on lending, right? So these are all the qualitative tools. Now monetary policy committee, very important guys. Monetary policy committee came into existence after amendment in RBI Act 1934. So RBI works according to RBI Act 1934. So this act is very important. And RBI, Reserve Bank of India, came into existence through this act only. Monetary policy committee, it consists of 6 members. First of all, the number of members of monetary policy committee, these are 6. RBI governor is the chairperson. Present RBI governor is Mr. Shashi Kanta Das. Then one deputy governor, one other officer of RBI, normally of the rank of executive director. Then 3 members are outside members, okay, from the field of finance and economics and related fields, right? Mr. Shri Chetan Ghate is one of the member. Professor Pami Dua is a renowned professor. Then Dr. Ravindra Dholakia, also a renowned professor from IIMs. The Monetary Policy Committee determines a policy interest rate. So this is the main function. Okay, policy interest rate means repo rate, right? In India it's repo rate, to require to achieve inflation target. Okay, so main purpose is to control the inflation in a range. MPC is required to meet at least 4 times a year. So this is the requirement. The quorum for the meeting of MPC is 4 out of 6 members. So total 6 members, 4 should be in favor of a certain decision, okay, so as to make it a law or a rule. Each member has one vote. Chairperson has a casting vote. In case of tie 3-3, then chairman will cast his casting vote and the decision will be taken in favor of chairman's vote. Inflation target. Inflation should be in appropriate range to promote growth and maintain price stability. So twin purpose. Okay. So RBI has to see, it has to serve two purposes: inflation targeting to promote growth on one end and to maintain price stability on second end. Okay, on the other end, right? So for 5-year period from August 5 to 2016 to 2021, the CPI target to be achieved. CPI, we will study about CPI in inflation videos related to inflation. This is consumer price index. Okay, 4% is the target with an upper tolerance limit of 6% and lower tolerance limit of 2%. 2 to 6% is the tolerance limit. We call it tolerance limit. Okay. Now, Governor of RBI, Mr. Shishikanta Das. These are the 4 deputy governors. Important. Please remember the names: Viral Acharya, BP Kanungo, NS Vishwanathan, and Mr. Mahesh Kumar Jain. Then, fact: 14th and latest meeting of Monetary Policy Committee took place in December. It was attended by all the 6 members, and minutes of meeting were published on 14th day. So this point is important, guys. Okay, and there's a meeting held after this meeting also. Now, how many times a year does a Monetary Policy Committee RBI meet? So there is a requirement of at least 4 times a year, but Monetary Policy Committee meets 6 times a year, once every 2 months. Okay, so this is somewhat old. After December, in February or in March, RBI has met again. Now, Reserve Bank of India, India's central banking institution, was established on 1st April 1935 through RBI Act of 1934. Remember this. It was nationalized on 1st January 1949. So it came under government's control, Government of India's control, on 1st January 1949. Okay, so remember these 2 important dates. RBI is also known as Bankers Bank, is a leading member of Alliance for Financial Inclusion. We will be reading about this in our later videos. Headquarters are in Mumbai, and this point is important, guys. Please remember this and make it as your note. Okay, include it in your notes. Committee set up by RBI to provide a roadmap on capital account convertibility. The keyword is capital account convertibility, and the name of the committee is SS Tarapur Committee. Then we have functions of RBI. Supervision of financial sector, comprising of commercial banks, financial institutions, and NBFCs, non-banking financial companies. Okay, non-banking financial companies are like India Bulls Housing Finance, okay, for housing loans. Then we have Diwan Housing Finance Limited. There are so many NBFCs. It is a regulator and supervisor of banking system in India. Okay, there's a banking ombudsman scheme has been formulated by RBI. Then it is the regulator and supervisor of payment and settlement systems. Okay, acts as a banker to the government. RBI acts as a banker to the Government of India. It manages foreign exchange markets also. Okay, so it tries to arrest the fall or rise of rupee according to the requirement of our country's financial market. So it sees that the rupee, the currency of India, it is in a certain range, okay, which is favorable to the market. Issuer of currency in India, obviously. Detection of fake currency. RBI has mechanisms to detect fake currency. It acts as a custodian of foreign exchange reserves. Okay, foreign exchange reserves. Normally, it is in dollar and some other benchmark currencies. Then monetary policy framework. The objective of MPF is setting of policy repo rate based on the assessment of current and evolving macroeconomic situation. So you just need to remember this. Okay, So inflation target is set by the Government of India in consultation with RBI once every 5 years. So right now it's 2016 to 2021 period is being going on. We have already discussed. Now some important terminology, you can expect one question from this. Okay, just remember this: expansionary monetary policy. Expansionary, you are widening something. Okay, you are pulling you are pulling something tied at the other end. So if you keep on pulling a string, it will expand, right? So increasing of money supply in an economy, you are expanding your monetary policy when you increase the money supply. Then you contract the monetary policy, or you contract it when you decrease the money supply. So opposite, right? Hawkish, like a hawk, decreasing of money supply, hawkish policy stance. Okay, so a question may come, what do you mean by hawkish policy stand? Then dovish is increasing of money supply. Okay, dovish is favorable, hawkish is somewhat strict, right? So guys, this video is very important as far as all the topics have been covered in this video. So you can expect some good questions, 1 or 2 questions from this video. Okay, so please do wait for our next videos coming soon. Keep studying. All the very best.